business of making a difference. The difference between failure and success. We do it by providing a unique blend of stakeholder engagement services. From investor relations and shareholder activism to strategic communications, corporate governance, and sustainability. We're empowering business leaders and helping them navigate the complex dynamic of shareholder and stakeholder interests. Helping our clients win the hearts and minds of their stakeholders, earning their support, their votes, and their confidence. Ultimately building reputational currency and delivering long-term corporate value. This is what we do, day in, day out, from our headquarters in New York, London, and Sydney, and offices across each major capital market. Our team of experts offer unrivaled global insight, combined with the knowledge of local laws and business practices. Our expertise has never been more needed. Sadali & Co. Building stakeholder capital.
Hi, good afternoon, everyone. It's a great privilege and an honor to be here talking to you today. So I'm here to present to you a case study in terms of what we at Sadali are seeing in terms of shareholder engagement and governance concerns, and how that's kind of impacting the outcomes on the transactions that we work on. For those that don't know, and I don't think that video really articulated exactly what we do and who we are, but we are a truly global business. We do operate in all the financial markets globally. We are a firm of 400 practitioners. We have more than 2,000 clients as well. And we've been operating for more than 50 years also. When it comes to who we are and what we do, so first of all, I probably should explain who I am and why I'm here in particular. So I'm a managing director in what we refer to as the Proxy area of the business, and that's shareholder services. So we work very, very closely with hundreds of listed companies around the world to assist them in securing shareholder support for transactions. And the way we do that is by trying to give them as strong a sense or as strong an understanding of their shareholder base as possible, where risks may sit among that shareholder base in terms of securing shareholder support, and assisting with the governance elements as well. So we help our clients draft disclosures, ensure that they're meeting the requirements of institutional investors, proxy advisors, and other stakeholders alike in terms of managing that best practice. We've been ranked as the global leader in these areas by a number of companies, including Merger Market. So hopefully that gives you a sense of who we are and what we do and why I am here. That, and as you'll see on the side there, we are one of the sponsors as well, so we've paid good money for this slot. Having listened to a lot of what's been spoken about today already, the deal drivers, what's driving M&A activity in Japan, I think that's been well covered. But as my colleague Andrew on an earlier panel said, we look at things through an investor lens. So not so much at the high level macroeconomic situations. We're brought in at the key part of a deal, essentially the end part where it could all fall over, and that's securing shareholder support. So when we talk about Japan in particular, and we are seeing a bit of a change in sentiment and mindset when it comes to M&A, more offshore M&A inbounds. With the METI guidelines that were spoken about on the previous panel as well, there's going to be greater emphasis and greater expectations placed on listed companies and their boards of directors to be transparent about the process when it comes to them receiving unsolicited bids. And that's going to be not just METI's expectations, as they've already kind of put in the guidelines, but international institutional investors, proxy advisors, other more global stakeholders will be holding companies to account in that sense. Again, on the previous panel, activists have played an increasingly important role here in Japan. Again, I think 10 years ago, there were 8 specialist activists. That's now more than 70. So it gives you a sense of the scale of activists and the role they play here in Japan. And we'll tap into that later also. PE, again, well covered. Private equity, I think last year saw the record year in terms of PE activity in Japan. It's only continuing to grow. And I think there was some tables on the previous panel which I should have stolen for this as well, which again just highlights those numbers. And Japanese companies, they're increasingly targeting overseas companies to continue to grow themselves and explore those opportunities to deliver shareholder value and shareholder returns. We're in a privileged position to work on a couple of major transactions last year where Renesas acquired Altium, a technology company that was listed in Australia, and J-Power acquiring Genex, which was a pure play renewables company in Australia as well. So we're having the benefit of being on both sides, the inbound and outbound, in terms of getting these deals with Japanese companies over the line. One of the benefits of our position here is that we get a real understanding of share registers. Obviously, once a deal's kind of announced, and that's where a lot of the deal makers in this room have done a lot of their hard work, is coming through to that final approval piece. It's understanding the composition of a register and how it's going to behave post a deal's been announced. What we have seen, and we'll get to some analysis that we've done as well, is that post a deal announcement, you get a whole raft of event-driven funds, global event-driven funds as well, looking to enter into the stock to take advantage of what may only be a very small premium, but a premium nonetheless. And so what that means, they can end up building up quite a substantial position in terms of the ordinary shares that they hold in the lead up to whether it be a tender offer or a shareholder vote. Obviously, they need to buy those shares from somewhere. And in an M&A deal, we do typically see active fund managers using that as an opportunity to reduce their exposure to the stock or get out completely and redeploy that capital elsewhere. So that's where the kind of the two key major movements occur on a register post the deal announcement. Other investor types and their behaviors, obviously we've just covered off the active funds, but they do, they make those active decisions as to how they want to participate in a transaction. They may reduce their exposure. They'll obviously voice their views, and we do count activists in that kind of active manager kind of bucket of shareholders. Passive funds, again, playing an increasingly important role here in this market. Your Vanguards, your BlackRocks, your State Streets of the world, they hold shares in Japanese listed companies because they sit within certain indices. And so they don't really make active buying and selling decisions. So when it comes to their participation, especially in the likes of a tender offer, it can't be guaranteed. Where they do participate and do actively engage is around shareholder meetings. They have a fiduciary duty to vote, but where they can't divest, they'll voice their concerns there, and they'll be very vocal in raising governance concerns around a company's, how they operate in that sense. Investment banks and brokers, again, they are typically the vehicle for a lot of event funds to get into a stock. And so the role that they play is essentially a placeholder for these event funds or arbitrage funds or hedge funds. So it's those event funds that are making the decision to buy the shares, but it's obviously the investment banks and brokers that hold the shares that you see on the register. And that's a large part of the role that we play, is uncovering these event funds as to who they are, what prime brokers they're sitting behind, and how to engage with them. But when it comes to participation in a corporate action, if it's the broker holding on the register, you may not see them participate at all. So that represents risk to securing shareholder approval for things if you've got 25, 30% of your capital held on swap through these prime broker positions. Retail shareholders is the next bucket that are an increasingly important group. Retail shareholders, as we've observed in other markets and as we're seeing here in Japan, are largely apathetic to corporate actions and participating in shareholder actions, where typically vote requirements are based on shares voted. They feel that they're not going to have a material impact on things. But in the likes of a tender offer, where it's marginal gains reaching a threshold, it's so important a universe that they're motivated to participate. So retail shareholders, using the means to reach them it can be quite difficult as well. But again, roughly 20% of issued capital on a register is going to be held by retail shareholders on average. So there's a huge chunk of issued capital there that can be tapped into if done right. And lastly, pension funds. And the reason that we kind of have pulled pension funds out as their own cohort is that they do typically retain the voting rights for the shares that they own, but the decision to buy or sell shares in stocks will sit with active managers, which they've, external fund managers that they've hired to obviously make those decisions for them. But they do have, as I say, active stewardship teams or governance professionals that will assess shareholder proposals and what's put to them and whether or not how they should vote. And they do rely on proxy advisors as well, which we'll also get to. So talking about the event funds, and we wanted to present this graph just to really highlight how much of a material impact they can have on a shareholder vote. We've analyzed a vast number of transactions that we've had the benefit of working on across the Asia-Pacific region. So that's Australia, Hong Kong, Japan, and South Korea, where we primarily operate. So you can see the individual transactions we've looked at, de-identified, and just the range, first of all, of issued capital that's been held by event funds and brokers on swap in the lead up to a deadline, and that could be a shareholder vote or a tender offer deadline that we've looked at. The average is between 15 and 25%. And the other thing to call out, and this is just an average of those positions over time. So the thing to really call out is just the increase that we see in participation from these funds over the course of a deal. Look, I'll highlight that we have looked at things over many weeks. So this will be well in advance of a deal being formally announced or materials being released to the stock exchange and in shareholders' hands. But obviously there are a lot of rumors, a lot of conversations, there are a lot of speculative positions that are built up. But ultimately, it spikes. And so the average is 18% of issued capital held by event funds in a stock in the lead up to a transaction. Obviously, we're here in Japan, can't ignore activist investors. An incredible market for activist investors and their behaviors and the things that they push for. The way that we talk about activist investors internally, Sally, is value and values. So value investors obviously looking to unlock shareholder value, work with companies to try and do that. A lot of those conversations happen behind closed doors, but over time they obviously do become public campaigns. Values is more around how are companies executing on their social license to operate. Market Forces is a name that came up in conversation with someone earlier today. They've been very active in the Australian market in submitting shareholder proposals, trying to push companies, banks, for example, to stop funding fossil finance. They even targeted supermarkets last year in Australian AGM season, the two main supermarkets in Australia, for them to challenge their salmon farming practices. So that's the values side of things. How are companies doing? What are they doing right for society? But looking at the value investors, obviously in connection to M&A and deals here, obviously their book, their playbook in unlocking shareholder value, what are the levers that companies can pull to do that? And look, I know that fully across all of this, but they're pushing to obviously to divest, and obviously in the Japanese market, a lot of companies across multiple different industries. How do you divest those non-core assets to then unlock shareholder value? Driving cross-border deals, and obviously again another big topic of conversation over the course of today. Seeking growth abroad. Southeast Asia, again, I know there's been a bit of an Australian theme, although I am from the UK, I'm based in Australia. We have seen two-way traffic in terms of M&A deals between Japan and Australia, and I think hopefully that's only going to continue to grow. Board accountability is a pretty big one. Again, consistent with the METI guidelines and what they're proposing here about that transparency. And the global expectations around how boards should function and operate, and what is best practice governance. In the sense of M&A, when an unsolicited bid is received, typically in other markets, an independent board committee is established to make sure that the proposal is assessed and is free, that process is free from any conflict, to ensure that it's not just the best deal at the time, it's actually the best deal available to all shareholders, not just serving the minority interests. And as part of that, that comes with investor expectations as well, especially the passive funds and other global institutional investors. They don't necessarily want to meet with key management personnel or CEO or CFO in the lead up to an M&A deal, or if they're going to determine how to participate. They want to speak to independent board directors, so they can also look a director in the eye and say, can you convince me that this deal is the best deal available to all shareholders? And the process that you've undertaken is one that's been robust and free from conflict also. And again, something that's been repeated over the course of today, just the change in language around how takeovers are received by Japanese companies as well, rather than hostile. That word kind of shifting away and it being unsolicited, which it's a mindset shift and a bit of a tonal shift there, which means that internationally people will see Japan as a great opportunity to unlock value as well. When we talk about activist investors, we've had just a quick look at the type of shareholder proposals that have been being presented over the last couple of years. And I think the two key things to call out here, when we're talking about value and values, activists, is between 23 and 24. The two areas that, according to Diligent, I should add, that we saw increases in the number of proposals submitted were that social shareholder proposals and the push for M&A. While I know the opposition to M&A only dropped by one, that's still a reduction. But for the push for M&A proposals to increase by more than double is I think quite telling as to the shift in how the Japanese market is evolving. Proxy advisors, look, when it comes to M&A and the way that M&A deals are typically structured here in terms of tender offers and then a squeeze out, proxy advisors, they won't make an assessment when it comes to a tender offer. The role that they play is advising their institutional clients how they should vote at shareholder meetings. There are two main global proxy advisors, ISS and Glass Lewis. ISS claims to have more than 4,200 clients, Glass Lewis 2,000 plus clients or 1,200 plus clients. But they do cover all major financial markets as well, pretty much the top tier listed companies in each market, so that their clients can make informed decisions. We talk about the passive funds and how they've evolved over the years as well, is they've increasingly bolstered their stewardship and governance teams so they can make more active voting decisions and be less reliant on the ISS and Glass Lewis's of the world. But that being said, a lot of them subscribe to both. And so securing positive recommendations from ISS and Glass Lewis goes a long way to securing support from the BlackRocks, the Vanguards of the world. So this becomes increasingly important when it comes to that squeeze-out component of an M&A deal here in particular. Because of the passive funds' propensity to not really make a decision in respect to accepting a tender offer, it's incredibly likely that they'll still hold positions when it comes to the squeeze-out vote. And so they'll be reliant on ISS and Glass Lewis to put forward their recommendations as to whether or not they should vote yes or no on that squeeze-out, basically. So an important stakeholder group to be conscious of, and understanding the influence that they hold over issued capital as well. So not to be why our clients come to us and sell our wares, so to speak, but we are brought in to assist kind of de-risk transactions. Globally, we hold a lot of very good, close relationships with financial advisors. In certain markets, the model will be that it's success fee based in terms of their fees, and so they need an insurance policy to ensure that every stone is looked under, to ensure that there are no risks in terms of deal completion, or we have a really good understanding of the risks very early on in the piece, and how do we manage that throughout. So we're brought in to de-risk this, basically. So our advice is for any issuer or any deal maker to really know the share register of a target company. So you know the different investor cohorts, the influence of the proxy advisors, what's the institutional component versus the retail component, even in the institutional component, what's passive versus active, knowing that post-deal announcement or post any announcements or things in the media that could trigger further changes on the register. So the registers do continue to evolve a lot over the course of a deal. And don't wait to kind of build relationships with new entrants to the register in particular. I think what we do see a lot of the time with the event funds in particular is that they're buying in because they can see an opportunity to make some money. They're quite a sophisticated bunch in the sense that they really do their due diligence on a deal and on a register itself. So they will speak to other event funds. There are a number of event brokers who provide their advice to a number of the event funds as well. And if they feel that, if they're buying into a situation and they feel that they've got enough of a pocket there of issued capital to take that to a company or take that to a bidder and say, we're going to vote down or we're not going to tender in unless you bump the offer price, they're willing to do that. So really having a strong finger on the pulse as to who they are, who's behind those broker positions, what are they thinking, do they think that an offer represents fair value, goes a long way to just de-risking that particular component. Having a response team in place, this doesn't just relate to M&A, it obviously activist demands as well. Having your financial advisors in place, your legal advisors, your shareholder engagement and strategic communication firms in place as well. Just doing that preparation, I think the Japanese market, especially with some of the regulatory changes, that the value up situation we've obviously been speaking about as well, means that there's obviously a magnifying glass or a lens being applied to those companies that are potentially undervalued. And so they know they're at risk from whether it be an M&A or unsolicited bid or an activist. So getting a good sense of, how can you respond to something knowing that you're potentially a target? Again, just preparation is the best approach here. Again, just with the changes around all the proposed guidelines from METI, boards need to fully understand their fiduciary duties. And they should get advice on it as well if they're not too au fait with it. Mentioned earlier around institutional investors and their expectations as to who they want to engage with in the lead up to a shareholder vote. That's annual general meetings as well as squeeze outs, as well as EGMs called by activists, whatever it might be. They want to make sure that boards have strong, robust governance practices in place so that they can make significant kind of and the right recommendations to shareholders that's in the interests of all shareholders. And lastly, kind of developing a comprehensive engagement plan, encompassing all of the above, right? Understanding your register, knowing where the risks lie among that shareholder group, knowing the influence of the proxy advisors, how and when they all like to be engaged with, how to engage with media as well. Media can play a big role, especially more globally, for the financial press as well. So having all of that mapped out, again, is just one of the better ways that companies can prepare and just be ready to go, right? And it's not necessarily been about being reactive, but being proactive in terms of understanding those stakeholder groups and having close relationships with them, so that if and when it's called upon, it's very easy to kind of get the conversation going and the dialogue going. Very much about controlling the narrative, and being able to take investors and stakeholders on the journey with you as a company, so that when you make those recommendations as to how they should behave, and whether it be agreeing to a deal or agreeing to an activist, or obviously defending your position and wanting shareholders to not participate or vote no, you've got the relationships, you've got an understanding of who they are, their key drivers, pain points, and you're able to demonstrate to them that you're serving their best interests. So there are, we've spoken about Sonali's global presence. We are very fortunate we do have presence, not just our global hub for APAC is Sydney. We do have a presence here in Tokyo. A growing team doing a lot of great work. So just to let you know that we are here. We are boots on the ground. So if you do need us, we're here to work with you. But for now, I'll open it up to any questions in the room. Okay. With that, I think I can give you some time back to your afternoon and have that afternoon tea break a little bit early. Thank you very much for listening.